Hey guys, Rob Mitchell here. Thanks for joining me for another mini webinar on Smart Super Day Trading Targets, sneak peek magic numbers. Yeah, what's a magic number and why is it important? Yeah, first off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Don't use the grocery money for trading. What's a magic number? Why is it important? Magic numbers define the point from which a market typically or historically will not return once it goes to a certain point. Yeah, this kind of thinking has resulted in a lot of our technology that we have developed in the trading room. Yeah, so once you go a certain amount, at what point do you keep continuing or not go back the other way? Either of those two questions will work. Yeah. It asks the question on any given day from a certain starting point, what are the chances that once I go so much that I will not come back the other way for the given interval of time? Yeah, we're talking about time in this particular thing. So we're capping that by a certain amount. The following charts, we're going to look at like 21 days or 23 days, I think here. And and we're going to ask the question, are we coming back through the other side in the interval? Because if it does, that's abnormal. Yeah, it's an abnormal market event. So it gives us information about the context of the market if it's doing it. And I might even ask you some questions towards the end of this little mini webinar about different ways that you could think about it or questions that you could answer with this kind of thinking. Yeah. So there's many ways this information could be used, and we'll cover some of them in the following chart. So I do magic numbers for in the trading room each day. We do them on 5 periods. I also like doing them on 3-period chunks. Yeah, but for the 5 period for crude oil, that'd be A through E. So A would be the first period of the day, and so we using for that particular way of looking at it, we're looking at the beginning of the day session as the reference point. Yeah. 2E period. When you see the charts, you'll see that they're marked out. I'll point that out to you. So by watching these things, it gives me a huge amount of information about what the market is trying to do, which is one of the main questions that I want to answer when I'm trading. What's this market trying to do? Who's in control, and what's the most likely direction for the range expansion? But in particular, these kinds of methods can do both of those. Yeah. So once you hit a magic number for an interval, you tend not to go back to the other side at about 80%. We'll see what the numbers come in at. Yeah, about 80% probability level. And this makes the other side what we call protected. This is a concept that we've been working with for a long time. At what point do you become protected? And on a 3-period interval, the stat often comes in around 90. Yeah. And so for the first, and usually out of the 3, if you're doing it in a chunk of 3, we're going to do 5s here, but if you do it in a chunk of 3, the first of the 3 gets hit about 80% of the time. So this suggests that trading away from a magic number break in a given interval could be beneficial. Additionally, these factors create substantial context for understanding the market and what it's capable of. Moreover, for the market to have a gap away from any 3-period chunk is about 70% against, so that might only occur about 30% of the time. And so when it occurs, you also know you're in an abnormal market condition. If I spot one of those, I'll point it out to you what it looks like. Yeah. So I think we're going to have 23 consecutive days on these charts. I set it to last month, a month back, and we're going to look at every day for that. Yeah. So here's A period, the first period of the day that I just described to you, and this is the level that we're talking about. So once I break that, I tend not to come back through the other side. You could also look at these based on other videos that we looked at and count the numbers to see that these levels get hit about 90% of the time or so. Yeah. So So on this particular day, we don't come back through the other side after we hit the first side, yeah, in the interval A through E. After this is a different story, and particularly so, well, actually, after that is a different story in stock indexes too, but the day's a little bit longer in the stock indexes, so you split the day up a little bit differently. So you should be able to do this one on your own, right? We departed from here, we tagged this, and we ran up here, and we never hit the other side. On this particular day, we did hit the other side over here in E period. This would be the other side, or this would be the other side. It came this way, and then it tried to go down for a couple of periods, and then came jamming through the other side. So that's the first one that hit both sides. First one out of the 23 of them that we're looking at. This one crossed and just kept on going. Just kept on going. This one crossed and kept on going. This one crossed and kept on going. You could pause the video if you want to study these a little bit. Yeah. Did this one get both sides? Yes, it did. This is our second one. Just counting on my fingers here. This is our second one that did both sides. You could ask yourself the question, what does it look like when I do both sides? I'm probably going to ask you that one later. Yeah. This one, yeah, one side. This one side. Typically in crude oil, this one, these charts being crude oil, we divide the market into the interval A through E and then F through K. Yeah. Typically that's what we do. And it's not uncommon to see a reversal at or about those levels. And that's part of the reason that we parse these out like this. Did that one get both sides? No, that one remained protected. This day remained protected. This one hit both sides. I remember that this event in the market. I think this was not an inventory day. I don't think it was a surprise. Something had happened. This might have been the result of an OPEC meeting. So this one hit both sides. This is our third one that took both sides. And if you were trading long here and you got stopped out on that one, that would probably be about right. Yeah. So this one, protected, 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 protected. Well, this one, no, protected. Came close, didn't it? Like within a tick or so. Hit the upside and later went back down again. This one, protected, protected. This one hit both sides. No, protected through E period, protected. You look at those crosses, it makes it easier to see it. Yeah. This one hit both sides, didn't it? This is our fourth one that hit both sides. Yeah. Took it out by a little bit and then came right back through the other side. Protected and protected. Yeah. So that was 23 of them, and we had 4 of them got hit. Yeah, 4 of them got hit. If I look at let me pull up a calculator. It'll let me. I didn't have a calculator handy. What's 4? That'd be what, 19 out of 23. Yeah, just doing that on my little. Yeah, that's about 80%. That's what we said it would be. Yeah, 80%, 82.6% over this interval. Yeah. So that's good information to have, because once you hit, you tend to stay towards that side most of the time. Yeah, tend to stay that side most of the time. There's other things that you could see on these charts. You know, like if you counted the orange ones, you'd see, we have got other videos that we did on this, it hit those guys about 90% of the time. Yeah. You could go through the math on that if you want to. What's percentage of the targets were hit over this study that are not in gray? That's the other way of saying it. What percentage of the time did it go in the same direction as the first magic number break? Did it go in the same direction? And if it's hitting them repetitively, you could also look at that in the same direction. How was it different in the cases that quote unquote failed? And could that information be used, or even if it looked like it was going to fail in advance? Yeah. Or you could piece together a scenario where you could see that it was likely to fail in advance. Yeah. And did it, what's another question you could ask on that? On the cases where it failed, did you get more range than you did going the other way? Yeah, because often you do. So you could study any number of these things and derive all kinds of ways of understanding the market out of these. There's actually no limit with Smart Super Day Trading Targets to the different kinds of scenarios that you can create with it. And I'm only just touching on the capabilities of the tool. Yeah. So for these cases, you could tell if the market was normal or abnormal before the second break happened, and more. Yeah. So study the charts in the video. Like I said, go back, pause it, take a look at them, study. What other patterns do you see? And how are the days that hit both sides different? And can you tell in advance? We already covered that. Can you see, and what can you see here that you cannot see just by looking at a chart? Yeah. Yeah. Some indicators, you put them on a chart and you could have pretty good idea what that indicator would be doing without it being on the chart. Yeah. For Smart Super Day Trading Target magic numbers, that's not the case. So Smart Super Day Trading Target works in conjunction with other known statistics or market metrics that we use. How is it useful if Smart Super Day Trading Targets are being hit 90% of the time, many times each day? And you can combine these factors with concepts from other Smart Super Day Trading Targets videos and various concepts that are also in this video that we've covered. The tools that we had on the today's video, Smart Super, no, I think we used time-based bars. No, I think we used time-based bars for this one. Or was it? Here, let's go back and check real quick. Yeah, these are time-based bars. Yeah. So we used the smart periods and the Smart Super Day Trading Targets. We didn't use the Smart Super Renko bars on this particular video. Yeah, that's what I've got for you in this video. All trading resources can be found at IndicatorSmart.com. Thanks for joining me for this video on Smart Super Day Trading Targets and magic numbers. Study the charts. If you identify any patterns, let me know and we'll share with you. Yeah. All this stuff that I do is really about sharing. And so that's why I like to share these videos, get feedback, and those questions and insights that I get from people becomes a network of people that are involved in advancing our technology that we've created. And it is a technology for trading that we've covered and created over these years. Yeah. So thanks again for joining me. We'll see you again on the next one.